Hello everyone, this is Dan Gramza and welcome to dangramza.com Market Studies for Monday, May 5th. What we're seeing here on Friday is a strong close here in the Russell, the small to mid-cap stocks. As we talked about in the advanced video, different behavior than what we saw with the other indices. But it's a sign of confidence. I do look for follow-through to the upside. Now let's take a look at the currencies. If you look at the euro, it did trade above its buy level. Dollar difference from the sell down to that buy level in that market is $550 a contract, but it closed below that buy value, so it's closing underwater. So be careful here on the long side. The expectation is that the US dollar will get stronger. So for the Swissy, look for a sideways move. And our friend Mr. Yen, dollar difference, sell to buy level in that market, $500 a contract. It's what I call a false sense of security. Sellers are here. The U.S. dollar is stronger. There's hardly a fundamental reason to see a rally in the Japanese yen if you think about what the Bank of Japan's policy is right now regarding the markets and in terms of their interest rates. What we're looking for in the Canadian dollar is an inside type day. Bitcoin's continuing its journey to the upside. Be careful here. Sellers are present. Oh, talk about sellers. Let's go back here and take a look at interest rates. The whole yield curve softened as yields went up. So prices came down, and it's that tariff situation that may be lessening a bit. Dollar difference from the buy to sell level in the 10-year notes is $843.75. I do look for further movement to the downside, not only in the notes, but also in the 30-year bonds. Dollar difference from the buy to sell level in that market is $1,750 a contract. Gold cooled off too. And I look for an inside day on Monday. Dollar difference buy to sell level up here is $1,100 a contract. Silver has not done much. It's slowing down. Be careful there. Its sellers are still present. But copper rallied, traded above its buy level. Dollar difference in that market is $3,000 a contract. But let me show you this. It closed below that buy level. So it's underwater going into the close. The bias really for this market is for a move to the downside. Just don't see that demand coming in from China hasn't really appeared consistently in this market. But let's take a look at what's happening in the soybean market. Here's a market that is firming up a bit. We got some talk about tariffs, and that's positive for this market. The buy to sell level there is $350 a contract. Corn, I gotta tell you, the weather right now in Illinois, for example, is looking pretty good. The expectation is that farmers are going to be able to get out there and get some planting done, and that puts some downward pressure here on corn. Corn is usually planted before soybeans in this part of the world. Now, what do we see here? The difference between the buy to that sell level is $200 a contract. In the wheat market, again, the tariff situation is causing some positive movement here because expected demand could be coming for wheat. $350 is the dollar difference between the sell level down to that buy level. Well, those are my thoughts for today. Thank you for joining me. Look forward to being with you again tomorrow. In the meantime, have a terrific weekend and take care.